Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol, USO. Today we're up 46 basis points and we have about 1 hour left in trading. On the 1 hour chart we are approaching positive MACD and we are on support based on the 200-day or 200 moving average. On the 4 hour chart we are approaching close to negative MACD. However, we see a convergence as we made a nice reversal today. And on the daily chart, we are still trying to break out of the 200-day moving average resistance. And I do see us breaching out of it very soon as we made higher lows and we remain fairly around concentrated at the resistance level. So I do see us breaking out eventually. So I do see the next resistance being around the price of around where we left off at the resistance back in July 12th, around the price of $12.50. And as for support, the next support that I see will be the 18-day moving average, this purple line, and that is around $11.70. So if we were to move on higher, that price movement is roughly around, it is 5% to the upside, and to the downside it is around 2% to the downside. So the forecast model is now available in the link below, so check it out. You can check for WTI crude oil, configure the settings, and you'll get the results of all the models that we just went over today. So do check that out. And also I added Gush and Drip, so do check those triple leverage ETFs as well. So do enjoy that. So back to the forecast model. I'll go day by day where WTI crude oil will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match. This trend dates back to July 13th to October 6, 2010. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we start off around the middle Bollinger Band, concentrating around that area, and then we proceeded to breach up, touch the upper Bollinger Band. So let's just mark all the instances where it touches the upper Bollinger Band. So we have the second instance right towards, I would say, the third quarter of the way of this trend, and then right towards the end as well. And let's mark all the instances where it touches the bottom Bollinger Band. So we have one right in the middle of the trend. And next, we will mark where it touches the middle Bollinger Band or revert back to the mean. So we have that instance right there. So in the trend in question, so let's evaluate it. So we start off around the middle Bollinger Band. After the middle Bollinger Band, we proceeded to break on higher, touching the upper Bollinger Band. After that, we see two more instances where we touched the upper Bollinger Band once more, and the last one, it was right towards the end. So now let's mark where we touch the bottom Bollinger Band. So we have one right there, and then finally let's mark where we touch the middle Bollinger Band. So we have one right in between where we touch the upper Bollinger Band. So we have about 1, 2, 3, 4, 5, 6 points. And we also have 1, 2, 3, 4, 5, 6 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. The model that we just examined was July 13 to October 6, 2010. So back then, WTI crude oil was down roughly around 2.34%, 2.34. So I do see WTI crude oil may touch back to the 18-day moving average, and we may eventually climb up higher afterward. So I do see that in the next coming days. So if you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.